Hey folks, Gary Dean here with Sentiment Timing. This is our technical video report for Tuesday, April 14th, 2026. I'm still a little bit under the weather. I have this really bad sinus infection, so I'm going to keep this a little bit short, but I want to go over everything. So this is probably one of the craziest short squeezes I've seen in a long time, because I was just writing something about it, and I was asking myself, I'm like, what has actually changed since Friday till today that would make the just a move like we're seeing right now that's nonstop? And if you take a step back, nothing has happened. As a matter of fact, the news was worse than it was, because we had the ceasefire talks, and then they kind of went sour, and that was leaking out on Friday. And then, we had the futures that were down on Monday, and to me, that was the institutions that were, they saw a perfect time to just cause a massive short squeeze. Now, because like I said, what has really changed? To see this type of move, and there's really nothing. And I'm not bearish on this market as far as like a long term. I'm just wondering what has happened between yesterday, and today that has made this an all-out buying frenzy. And a lot of it is the buying frenzy, but I think a big part of it is the bears getting squeezed out. So we have another just unbelievable day with the spiders. So we have, let me hang on one second. Okay, so this was where we had, I got short the spiders up here, which I mentioned, and then from there, when it gapped down, what happened was we landed right at the 50-day move, the 200-day moving average on, it's a 5-minute chart, and then buyers just stepped in, and once we started taking out resistance, I was out of the trade. I could have made a lot more, but I didn't, and it was, just been nonstop since then. So from yesterday, we have the spiders that have gone from 676 all the way up to 694, and that's just a massive move, and it's like I said, it's hard to explain. But one thing that my years of experience is that once these bears are out, typically we're going to retrace in a pretty fast manner. It could be with some type of news that the talks on Thursday breakdown. I'm not really quite sure, but it's one of the things that I don't never really jump in on the long side on a massive squeeze. I will take the straddle trades and do that, but you just don't know when it's going to turn. And the thing that I'm seeing right now, this is basically from when we started blasting off right here. It's been absolutely nothing but selling from our liquidity indicator. We have our buy sell pressure that has been, this was the top right here, and it's just been declining on that. And if we look at the 15-minute chart, it's really the same thing here, where it's been just, there is no buy here. So this entire move from here has just been nonstop selling. So I've showed this before, where the institutions, can they be early? And they were here. They did this, they were getting long this entire trip down here, just like they're getting short this or selling this entire move up. And eventually what happens is you hit your bottom, and from there, the spiders goes from 629 up to 694 in a matter of 3 days. So they could be early. They usually are. But they're also, what happens is once they're positioned, the drop usually takes. And I don't really think this one's going to be any different. Am I saying to jump short right at the open? No, you got to pick and choose your spots. As we've, I've said on it, you got to wait for it to stop going up to try to short it. And, I was working IWM today. I got out of the one call position way too early. We had the 266 puts, 267 calls, and we were up at resistance, and I was like, all right, it's time for some type of pullback here, and pulled the calls off, and I mean, heck, that thing went all the way up to 269, so that was a mistake. But we started building them, made some money. It was a little bit of work. It wasn't, the easy trade was just jumping along. But again, I have to follow a system, and my system is I'm following what the institutions are doing, and I'm going to pick and choose the different levels that I'm going to get short, and that's it. And right now, like I said, this is nonstop selling that we're seeing right now. It's a massive short squeeze. So once the bears are out, which maybe some of them are waiting for the highs to be taken out. It's hard to say on that. I mean we still would have another. We're looking at another 3 points higher on the spiders to get there. But we have these sell signals in place with the divergence indicator here. Not divergence, our duration. This one had some buying today with the spiders, but again, if we look at our divergence indicator, this has been nonstop selling. So to me, it's more of just a patience game. And as I said, I'm not even saying I'm bearish on this market long term. I'm expecting that we're going to get a pullback, and we're going to either test the 672 or a really good chance of coming down and testing the 660. And it's probably going to do it in the same type of manner where we wipe everything out in a matter of days. And it drives people nuts. And, it's not an easy thing to trade. But as I said, if you give yourself some time and just pick and choose where you're going to get short, and you're following what the institutions are doing, you're going to end up on the right side. So we're, all-time highs. We're right here. It's 698.27, about 4 points higher than where we are. Again, that's 40 points on the S&P after traveling this far already. But in any case, it's maybe they got to go for it. It's tough, but as I said, there's a lot of selling going on right here, so I'd be a little bit cautious. So let's take a look at IWM again. I mean, this was just on the 30th. We are at 238, and now we're trading up at 270. That's like a 13% move in a matter of a week or so. So they're not sustainable. And this is the part that I get a little agitated about the bulls when they do this. And a lot of it is because there's a lot of bears that are getting squeezed. This isn't even the bulls doing it. But when we head down, we usually do these stair steps, and they're brutal, but they're stair steps, so you can make money on both ways. This is it's a nonstop press higher. So again, selling. This is high liquidity selling, high volume selling. We did get a little buy on this dip right here, and that's all we had. But again, just looking at what's taking place, it's just nonstop selling. And typically when we see that, like I said, you can see it move higher, but it usually ends with a bigger move to the downside. And this was really the last example, but this one wasn't even really that close, because we had IWM at 245 and it made it up to 271. So that was a 25-point move. We're already 30 points above all that. So we're way above it, and it done it in a very drastic manner, meaning straight up. So the law of retracement, you just don't try to sidestep it. We're gonna retrace no matter what. It's just a matter of from where, and that's why I'm saying I'm cautious. I'm starting to build a little bit of a short position, but when you don't want to get caught in one of these short squeezes. I do believe they're at the tail end of this short squeeze, because I don't know how many more bears are out there after just getting annihilated. So I'm picking and choosing my spots. Maybe what we may have tomorrow, which I would absolutely love to see. We haven't had that trade in a while, is a gap to new all-time highs, and that's really not that big of a jump for IWM. We're talking a 250 jump, and we're at new all-time highs. And that, yes, I will short that pretty heavily, because within 2 to 3 days we will come down and we'll close this gap. And that trade is almost at 100%. I don't remember it being wrong yet. So if we do get that, I'm all over it. But again, the main thing is just looking at the selling, and you got to be very, very cautious right now. And again, just until we do some backing and filling. Again, longer term, I think we're going to see this IWM trading, as high as 300. I think that we're going to see the spiders a lot higher. But right now, when they go all in a couple days, I don't go near it. I'll miss it if I have to. But it's just not really my cup of tea. So let's take a look at the 15-minute chart, and really same thing. This is just nonstop selling the entire day. We have divergences on everything. We have our buy-sell pressure diverging. So again, can you go long and make a lot of money tomorrow? Maybe. It's just not something that I do, just because I'm seeing what's in front of me and I'm saying, hey, it could go higher. I'm just not going to be buying into it because it's going to hit a rock and then drop $3 to $4 in one day, and people are going to be buying the dip that just closed their short positions, and they're going to get wiped out as well. So I'm taking it very, very cautious right now. The good thing is that the portfolio is doing well, because a lot of these stocks that we're in that we have been buying lower are jacking up. But we overall, it was a decent couple days, but a lot of it had to do with just a portfolio of stocks that we've been holding. So I'm going to leave this with, listen, just be careful. Can we head higher? Absolutely. Am I bearish on this market long term? No. Am I bearish on it short term? I'm getting pretty bearish on it right now, but again, I'm going to pick and choose where I'm going to short. So with that, have a great night, and I'll talk to you guys in the morning.